If you are serious about making 2026 your strongest investing year yet, then tonight's episode is for you as we give you the best cheap growth stocks that are set to be 2026's biggest winners. From super boosting large caps to mid and small caps with setups that traders dream of, we break down key levels and strategies you need to know to win big in 2026. With market insight trusted by major media worldwide and the brains trust behind Australia's leading government accredited share trading education, we'll show you how to head into 2026 feeling prepared, confident and positioned. I'm Philip Tortevsky, joined by senior analyst Janine Cox and Pedro Banales, and we are Wealth Within. Good evening. Guys,
Good evening.
How are you going?
How are you?
I'm great. How are you?
You sound a little bit croaky. You've got your radio voice on today.
I've got my radio voice. It hasn't been from partying, so that's the main thing. Pedro, all well?
Yeah, well, I can't believe it's that time of year again.
Yep.
I can't believe, we're here.
Yeah,
So.
look, I'm excited.
There
Anyway,
you
even
go.
if you guys aren't, I just
Well,
dressed
I
up for
was
the
waiting
occasion.
for something interesting
You know,
to
just
happen.
to make
Wow.
this set look a little bit spiffier.
There you go. Well, Christmas has come early, but let's get big picture first. Where do you see the big growth coming from 2026? Janine, I'm going to start with you. We're almost there.
Yeah.
December, this is often the time when the rallies do start for a lot of sectors and stocks, so it's a perfect time to be getting ready for next year. What is your pick for where we're going to see big growth?
I think people have to look at the areas that have been sluggish, lagging everything else. So, for example, we've had healthcare, we've had energy have been down, materials has been held back. We're now seeing a bit of a boom in that so far, and I think there's more to come in that area. Utilities, I think, will be quite good. We're seeing consumer discretionary, consumer staples; those areas have been pulling back. I think there'll still be opportunities in those areas. I think it's going to be a broader market push up. So I don't think that investors have anything to worry about at all.
All right, so broad market for Janine. Now I know you're going to be quite specific here, Pedro.
Oh yeah, that's
and
right.
I can guess, but tell us, what's your 2026 pick?
Well, I think it's going to be a commodity story myself, more specifically minerals, resources, rare earths, things like that. That will continue as a trend, into the coming years, not only 2026. And of course, energy. Energy, like Janine mentioned, has lagged. We're going to need a lot more energy if we want to push this AI story as well. So technology is a little bit of a dark horse in all of this. If they can sort that out, then technology, it's been hammered this year, basically, to say the least. So that's one to watch out for as well.
Fantastic. All right. Well, the important part, stock time. Get your stocks ready now to prepare everybody for 2026. What have you got?
Well, look, this is a big leaders board, isn't it, Pedro?
It is. Mixed bag.
Yeah, mixed bag. CSL is the first one up. Now, obviously, we've seen a massive decline in CSL. So this is what we're talking about with opportunities in the healthcare space. If we start from the top up here, then you can see that it's more than a 50% decline to that more recent low on CSL. I think that's a really good level, as we've said in previous shows, to see a bit of a short rebound from this level. And there's a really nice support level. If we come here, we can see across that level there, previous resistance and support all in one. So I think there's a reasonable target for CSL for short to medium-term trading. There is still some risk to the downside, as we've also cautioned before. But while it's actually holding, I don't think investors have anything to worry about, and there's a potential, once a decent set of rules have triggered, to be able to get in.
Well, that was going to be my next question on this. I mean, when you're looking at it, what, I guess, advice would you give to wannabe investors or traders with a stock like this? Because it's CSL, it can go in super funds, it can go in all sorts of avenues, yet the stock is down quite sharply. What's your advice in terms of, if you are looking to add this to your super portfolio next year, what do you need to see?
Look, even if you have a super fund, you still need to have a decent set of rules and a trend line, a simple trend line that you can get from or learn about from Dale's book, How to Beat the Managed Funds by 20%, will set you up and protect you and give you opportunities for the upside, and also protect you from the downside when the eventual top comes.
Yeah, now that book Janine just mentioned is this, How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. See the link in the comments section below. There's plenty of it for Christmas, so please make it your Christmas present, like Janine's hat there. All right, next stock.
All right, next one we have Block Inc. Now this is a huge stock on our market, and it's one that's I find it's often overlooked. It's got a market cap of around $3 billion. And look where it's gone. It's basically gone nowhere for the last 3 years. And really, since it IPO'd, it hasn't managed to even recover up to the IPO price. So this one is one that it is at an interesting level at the moment. Let's open up the monthly chart to really see what's going on. It has been sideways bound. Like I said, for the last 3 years, we've got some heavy support there at around that $84, and then we have some heavy resistance at around that $120. So as you can see, visually, technically on the chart, it's looking like it's about to find some support, possibly by the end of the year. So this is why I think that moving forward to the end of possibly 2026, we could see a nice bounce up to that level, at least up to the $120 level there. And I should mention as well that the P ratio on this one is quite low. It's below 10 at the moment. So, from that value investing point of view, it's looking good as well.
Well, I was going to ask that question because, I mean, obviously the technicals are there getting close, but was there anything else with this company that was making you interested to say, hey,
yes,
it is looking cheap at the moment? Yeah,
well, the fact that they're a payments provider, right? So they facilitate payments between, merchants and things like that. They own Square, which is that payment method as well. So that's not going away anytime soon. Obviously, we're having more and more spending coming up. So these guys should have their bottom line brought up as well. But it's more of a technical reason as well, and from that P ratio point of view. But there is a little bit of caution that it could actually dip briefly below, because we do have another level here. And this is why it's so important to have a look at the chart and not only focus on the fundamentals, because that lower price there at around that $60 does represent a bit of a steep fall on that $30. So if you're going to just buy on that support, you could face that further 30%. So that's why we always say, trade on confirmation, not speculation, and look at that larger time frame, then go into the smaller time frame to see what's going on. So for this year, not ready. For 2026, different story.
Yeah, good advice. All right, next stock.
All right, Iluka we've got next, and this one actually looks really good, how it's actually taken off and confirmed another level that's a historical level. When you see a stock hitting these levels and rebounding, or pulling back and then rebounding, that's what you really want to see. So we've actually seen two really nice ones off Iluka, one that's higher up and then this one lower down here. So it could come back to find a bit of support a little bit lower than where it is now, or it may just turn around and start moving up from there. But if it actually shows confirmation of support, as Pedro's saying, confirmation's still so important. Don't think, all of a sudden I'm getting this stock cheap because it was trading at $10 just a few weeks ago. And mind you, that sort of tells you a lot about the volatility of this stock.
Oh, yeah.
And the sort of people who should be trading this thing, because it's not for the beginners. But if you've got the education and you've really learned how to find a good strategy on this one, I think it'll really serve you well. Just wait for that support to be confirmed. And then from that level, there's an incredible upside. If it holds there, it's another 65. And then once it heads back up there, I think it could break through that level if it manages to do that much. That's a huge leap for any stock to make a 65% gain. And it seems to do this in the short term. If we just look at what happened when it broke out of this low here, there's 138% for the rise. Even if you were looking for an exit somewhere around here, it's still 60% at that point.
It's an interesting stock, right? Because it's seen a big reversal after a huge move up. And I find oftentimes, when we speak to traders, in particular me, there's this FOMO issue where you see they might have bought the stock, they sell it, they've made a profit, it's reversed back strongly, and now their mindset is, I don't really want to get in again because I don't want to give up the chance that I could be wrong. But then this might just be meaning you're going to miss the best opportunity.
The better one.
Yeah. What are your thoughts on that?
Yeah, I think that's a really good point, because, this is a stock that it's demonstrating what it can do, and the fact that it's come back is just an opportunity for the next one, really. And when you can line up a number of ducks in a row and you can tick boxes to say it's not just the fact that it's taken off and it's volatile and it could produce a nice return, it's the fact that it's respecting these levels, and there'll be some other levels behind this which we can't show you right now because that involves a lot more analysis. But you know, those of you who have done our Module 4 in our course, our price analysis, will know how to find these important levels and things to watch out on the chart.
Yeah, fantastic. All right, next stock.
All right, next one. Sorry to take this one from you, Janine. This is BHP. I know this is one of your favourites. I don't know, possibly
great,
Rio.
doesn't it?
It does look great, especially here on the weekly chart. I know we always focus on the monthly, but I just wanted to note what has been happening. If you've been sleeping on this stock, I urge you to have a look at this because you've missed on already a nice run up. So all we have to do is just put a nice little momentum there, and you can see that it has respected it beautifully. And now it looks like it could be coming down, but you can see that it doesn't come down often to test it. So it could actually reverse before it gets there. So I wouldn't be waiting too long, because it does take a while to come back and retest it.
Yeah, it's a really interesting stock, BHP, and I want to get your thoughts, specific thoughts on how long do you need to see this current run go before you can confidently say, hey, we've really turned the corner here, because BHP over the last 12 months has been hammered news-wise, earnings-wise, the China story, no good, everything's no good yet. The share price is climbing probably for the longest it's been for a while now.
Oh, yeah.
So is it almost at that point now where investors can say, hey, you know what? This is serious to consider for my super fund in 2026?
Well, it definitely looks like that. And really the only way to do that is technically on the chart. And this is why we're always on the chart. You can't say, fundamentally, because the fundamentals would have been supporting all the way along here. BHP was still a strong company. And if I could just zoom out here on the weekly, you can see that now this has changed. This is different to these previous runs that we've seen here. It's been very erratic on the way up, and you can see these types of moves that they've just gapped up. This is a lot more uniform, and it's nice and even the way that it's come up, and it's also broken above this downward trend here. So I'm quite happy to say that this has turned a corner and that we are heading to the $50 level, possibly into 2026 and beyond. And I think that we will actually eventually break that because it's got the tailwind of copper. It's very diversified in its mining operations, and it's a world-leading mining company. So the story's there, the technicals are there. Love it. Fundamentals as well. P ratio is looking good as well.
$50 in 2026.
That's it.
There you go.
$50.
52 or 53, actually.
Okay.
Oh, right.
Even
to be
higher.
exact. There
Thank
you go.
you. All right.
Your analysis.
Next stock.
All right. GQG we're looking at. Now, look, ordinarily, I probably wouldn't look at something like this, but given that it's actually come down in this sort of cascading fashion, and you can see those highs getting lower, and even though the volatility underneath it is disorderly, the way that it's done this is really orderly from a trend point of view. And yet now we're seeing the start of a return of potentially to come back and challenge that line again. So I'd really be interested in this once that line has been challenged and it starts to move on. Where could it go? Well, the other interesting thing is that when it came onto the market, it's actually traded down significantly, probably almost halved in value when it fell away, which is another interesting point because often we see stocks when they list on the market do that. And then it spent so much time trading sideways. To me, I think that this obviously was a bit too early and now it's coming back to test support along this move. This could be as good a time as any if you were thinking that you'd missed it. I don't think so. I think that it's setting up now. It's just a matter of being patient and waiting for the right opportunity.
Look at the volume coming into it on the weekly as well.
Yeah, well, volume has been increasing as we've seen go across, but obviously that can happen as the price gets lower. We can see volume increase. We're looking at some tops over here on the left-hand side. I'd like to see it come back and really show a strong sign of support off that level. Some traders, if you're short-term, you may decide that it's an opportunity just in doing that and you see a reversal out of that because the upside is showing that there's probably around 230 in it, and that's significant enough to justify a trade in it. It just depends on the rules that you've got and how you want to manage that risk.
Yeah, all right. Looks like there's some really good opportunities out there. But anyway, that wraps up our first round, but we have more amazing stocks coming shortly. And we're going to break down the massive news coming out of the US with a mega deal war in entertainment that could send one stock share price flying. This is your playbook for 2026, so don't go anywhere. But now, time for our trending topic this week, Janine.
Yes, Phil. Well, markets are bracing for a big cut by the US Federal Reserve this week, as this cut could cause global markets to go into a tailspin in 2026. Now, Morningstar published an article 6 weeks ago. Federal Reserve Chair Jerome Powell surprised everyone by saying that an interest rate cut at the central bank's next meeting in December was unlikely to happen. Days away from that meeting, Fed officials have clearly signalled they plan to cut rates by 1/4 percentage point for the third straight meeting. The market saw this as a green light, but the Fed is divided. Will there be a hawkish cut? By how much and when? Rick Ryder from BlackRock had this to say.
I assume you expect a cut on Wednesday?
Yeah, I don't think it's definitive, but I mean, you're going to have a cut, and I think the market's almost universally think it'll be a hawkish cut, and that he will have to give some time to have a number of members on the committee that are hawkish, and so I think he's going to cut. I think it's going to be a hawkish cut, but it's definitely not definitive that they go. If they weren't going, they'd probably transmit something in advance. So I think you got to put down that they're going to cut 25.
But you think it should be definitive?
I mean, I think it should be definitive. I think it should be definitive. They go this month, they go next month. Listen, I still think we have room to go. I think once you get to a 3% funds rate, then you stop and interpret where is the data. But I think now, given the deceleration you're seeing in labor and a bit elevated inflation, but it's not really impacted by this interest rate, that I think you can get to 3% without any question whatsoever. I think this committee will go in a more deliberate fashion, but yes, I would go to get to 3%.
The US economy isn't in a contraction, but it is cooling. These are often conditions for a boost to equities. And UBS said last month that investors should put their cash to work. Now let's take a look at what this means for our market and world markets. Now, we've got a chart here of the All Ordinaries Index. I'll just go to the monthly chart, and overlaid over the top of that, we have the MSCI World Index. Now you can see this is sort of like to the naysayers who firstly talk about when there's a correction in a global market that our market doesn't feel it. Well, it does. Our market's pretty well tuned in if you have a look to what's happening across the globe. In fact, mirroring what's happening more in the broader sense. And that means a lot of things to us, because it means that when the US pulls back, more than likely we're going to be pulling back too in those major moves. And even more so now with the impact of AI and how all that comes together. But with the Fed looking to cut, and our RBA having just made a decision this week to put rates on hold.
Today,
yeah. I mean, that's interesting, isn't it? Because even when the RBA is doing what could be the opposite of the Fed, we still see markets rise to the news of the Fed's drum. So if we just go back to the chart again for a minute, we in this period here, this was back in November 2024, the Fed made 3 cuts. Now we can see there the markets were at highs, and then following that we saw a dip in the market. We're now at another period where the Fed is on the verge of just making that 3rd cut again for the year, in the back end of the year, and we've seen markets pull back, to that drum. So I'd be saying that it's going to be short-lived that we see this, because even though, I mean, there's a lot of talk going on at the moment, there's no jobs, the jobs data is not even going to be updated for a week or two until after the Fed's announcement, but the market commentary is that this doesn't really mean anything anyway. It's not important because the Fed's got the history of what's already gone before it, that it wouldn't be a bad thing to make a cut, and that they could make a couple of cuts next year. I still am sort of sitting there wondering, are they going to do something to surprise us all? Because there are a number of influences on that committee that really want a big cut, a 50 basis point cut.
Yeah. And
so there's just a question. I mean, if that went ahead, the market might get a signal, hey, maybe things are worse than what they really are.
Yeah.
But more than likely, steady as she goes, I'd say at this point, which is going to be good for markets, not too volatile. but just the right amount of measure.
And that probably plays in well with what you're going to see out of the All Ords, I'm guessing, moving into the first quarter of 2026.
Yeah, I think it's going to be a good year next year.
Yeah, fantastic. All right, now if you want the skills to analyse stocks just like you've seen tonight, visit our Wealth Within website, wealthwithin.com.au. But now let's get back to our topic and get into some more 2026 beating stocks. Pedro.
Let's do it. This one's a good one. So it's Data. It's one in the technology space. So I did mention that technology is a bit of the wild card, but I think that this one is setting up very nicely. Let's start here on the monthly chart, and we can see that it's recently bounced off a key critical level, which is around that $8. Right, it was a previous all-time high. It struggled to get through it during 2020. It, powered through, came back in 2023, found some support, tried to get ahead. Obviously, the CEO, he made some mistakes, unfortunately, and there was some stuff about him that had come out. I think he ended up selling a lot of his shares. So it came back. Buyers came back in to buy it at that level again. So you can just see how important that level is. So if you were to take a trade on that, you can say, well, with a high level of not certainty, but probability, confidence, yes, that, you've got that 21% kind of buffer, like a pillow to kind of support there. Yeah, I'm thinking about better already. It's already.
Does it give you? Can I ask? Does it give you confidence that when you look at the whole tech sector, how it's fallen away about 30% the Aussie tech sector, then you look at Data.
Yep,
it's not fallen at all.
Exactly, it's actually done the opposite. It's powered up, and I'll go to the weekly chart here to really outline why I think that this is setting up, and this is the reason why right here. We've had a test of that $9.60. Back testing it again, and then it's come back up. It's putting one of those classic patterns out there, and I think that if it does break above that $10, then it's looking very interesting. And much like BHP, it has broken above that long-term downtrend that it really established. So it's really a different stock right now. It's trending up, and then just finally you could just put a nice little momentum there to guide it along. I think this one is great for 2026 and a good dividends as well, and a good P ratio at the moment.
Yeah, and you know what's an important question I forgot to ask both of you when it comes to 2026? Volatility, right? It's been a big thing in 2025, 2024, and in 2026, what are your thoughts on, the volatility of the market? And I say that because it really comes down to when, rather than looking at it from an economic standpoint, it's if you're investing or you're trading right now, it's so important in terms of how you approach the market in 2026, your rules, your strategies, how you get educated, what you know, what charts you look at, what time frames, all that stuff. Do you see volatility increasing as we move into 26 and 27, or is there a chance that things cool down, and settle potentially? I don't know.
I don't think so. I mean, especially around February and August, that's when we see the most volatility around reporting season. And we've talked about this before, that it seems like now in reporting season, things have gotten even more volatile, and that's probably due to technology. But notice how the types of stocks that we pick, and I'm talking to the viewers here, we know by looking at a chart the type of volatility that we like and that we are comfortable trading. And you only get that by experience and by looking at the charts and by knowing about technical analysis. The novice, unfortunately, would look at a stock and they won't be able to tell. They won't even focus on volatility. Whereas we know the right amount. You don't want too less. You don't want too much. You want just right, that Goldilocks kind of volatility. And these are the types of stocks that offer that safe, but also get you the returns.
Yeah, it's very important. And it came to my mind on that point. We are offering a special, the Christmas special, which has got thousands off what you're getting in terms of doing the course. So please, there's never a better time to go and do the course, especially with the things Pedro was just talking about. You really do need to know what you're looking at. You need to know your volatility, your entries, your exits, and that is all taught. It's not gained by just waking up one day and knowing it. So go and check the website out. The link is in the comments section below. Turn yourself into a professional trader in 2026. So back to, good point on everything you said. Let's go to the next stock.
All right. S32 is the next one. Now, This one has been watched like a hawk by a lot of traders.
New Hope, we forgot about that one.
Oh, okay, can we
You
swap?
don't like it?
Yeah, I'll grab New Hope.
I do like this one as well. All right, so let's have a look at what we've got here for some important levels. Across there, you know, everyone got a bit of a sneak peek as to the next one, didn't they? We can see that there is some decent support across this level around that $4 mark, but it's just sort of skirting below that at the moment. It still has to prove that it's going to be able to get through that level. So I think this has huge potential, but right now we're seeing a bit of I guess a slowdown in this stock, right? You know, while it's just going sideways really at that level. And what it is showing, it's proving that that level is so significant that once it actually makes its move out of that, I think that this stock could really go quite strongly towards that all-time high, if not to around 650.
Yeah.
Well, look, if it's any consolidation, they actually, once they finish their mines, they have this program where they plant a whole bunch of grass and then they put some cows and things in there. So it is very environmental safe.
What are you trying to do?
I'm trying to butter you up to this stock.
I don't think I need buttering up. Right now, I'm just looking at the chart. Okay, let's just keep it really simple, shall we?
Exactly. And I mean, but when you look at this stock, and I'll get your thoughts, Pedro, on this. This is one of the, I guess, a stock in the higher indexes, but one of the ones that has pulled back quite a lot when you compare it to, you know, a lot of the other stocks that we've had in 2025. So again, you mentioned earlier about that deep or that value type play.
Yes.
There aren't that many of them. Maybe this is one.
Well, this has a great dividend. You know, I believe it's around the 7 or 8% at the moment. Good P ratio, plus Whitehaven and Yancoal have already made some very big moves. I mean,
yes.
for those who don't know, this is in the coal space. They've already made their moves, whereas this one yet hasn't. So that's why I'm keeping an eye on it. And I think that if it does break above that trend line that Janine just put on, I think it's looking quite interesting. It's lagging.
Can I ask you a question, Pedro? You know, you were trying to butter me up for this one. If somebody trades this short term, they're not really investing in the stock, are they?
They're not. They're just buying it from somebody else.
It's just buying an opportunity, a short-term opportunity in the price action. So someone asked me about this the other day.
Yeah. But then it goes back to the question of why you're going into the market. If you're going in to invest because you believe in something, peel all those layers back, and I'm sure we're all going to come to the same answer. You're trying to get something specific out of the market.
Yes.
And that's a return. And that's money. And so, you know, to your point, sometimes, I know we've got students that can, and we've done it ourselves, give us a blank chart, forget about what the code is, forget about the name of the stock, and you can still trade it. And that's the point. Like, where do you want to sit in that? Maybe it's a shift in 2026 for someone out there that's thinking, well, maybe buying what I know or trying to trade what I think versus doing what price tells me is the shift they need.
Yeah, and I think that was a good point that you raised, Janine, because a lot of people may think that you're buying the stock, you're helping the company. Well, you're not. You're buying it from somebody else, and you're just buying the right to receive any dividends or any potential gains that come from that company. You're not necessarily adding to the cash flow.
Well, let's call it what it is. You're just trying to make money off the stock. So anyway, let's get to the next one. What's the next stock?
S32. Now you started it, Janine. I know that.
Jump in there.
Yes, I know you like this one. I've had my thoughts on this one the other day. What are your thoughts?
All right. If I'm given the opportunity, why not go for it? All right. So we're just looking at some levels across this stock. We can see a major significant level there. We've got the all-time high out there. Then we've got another one underneath this low here. So I think S32's been hovering in this range for so long. I think it's enough, really. I think it's done. And now we're seeing a shift because we've seen this big move through that line. But as we know, a stock like this can go up for a few months and then get sold off quickly. There is a gap on the weekly there. I think it could even be on the monthly there as well. So we're looking at, and this is what students find really fascinating, I think, when they're learning the art of the trend lines, because it's not just a matter of drawing a line, it's understanding what happens with that. You know, what are you expecting to see when the trend line's in place? And so without going into the teaching of it, S32 could really surprise right now. So there's some upside to that next level, and that level's not fixed in stone either. It could be different slightly this time round when the stock takes off. So you might be thinking, oh, it's 16%, but if you do a broader analysis, it might actually be 25 that's in there. So, and that's, I guess, the advantage for someone who can actually see beyond just a couple of lines on the chart.
Yeah, and for a stock like this, you mentioned something very important earlier on. You said it looks like it might have turned the corner. Is this one where investors look at it with, I guess, given the volatility, is it a more longer term play? Look at it wider, look at the longer term timeframes, or try to keep it short and tight? What do you think is the best approach with this?
I think it's either, depending on how you set yourself up.
Yep.
So it's the entry that's really important, and that risk management strategy. So it depends on the way that you want to handle it.
Yeah, good call. All right, next up.
Very political. Yeah. All right, next one is Clinovel Pharmaceuticals. Now, this one, I think that has been overlooked. Another one in the healthcare space. Healthcare has really gone nowhere, but they're starting to look quite nice. And I'm going to start here on the weekly chart because this is telling a very interesting story. It's really been falling since 2021. It's failed to make any significant rally. We did see this rally earlier here, but then it was essentially broken, and it was a nice, little trend that it formed, but then when it broke below it, it was all over. But now we're seeing something similar to what we saw back here. And if it's anything the same as what this is, then you could at least expect a run, for the next 1 or 2 years. So I'm thinking that for 2026, this one is looking very interesting, and I'd be looking for a close or a break above that $13. When it eventually starts to turn it and form a new trend. Right now, the momentum is fairly shallow. You can see it's a lot more shallower than this one was, but that's good. I actually like it that it's more sustained. It's not these sharp moves to the upside, but look at the volume coming into it as well. We're starting to see a bit more of a pickup. It was kind of left behind from much of 2023, and then there's a lot more interest coming into it. So I actually do quite like this one. This would probably be one of my best picks so far.
Right.
I'd go, so much as to say that, definitely.
Great. Don't give it away yet. I'm going to ask you that in a second, but let's get to the last one before we do, QBE.
All right, QBE. I like QBE. It's insurance stock. It's been dogged by all sorts of bad press and things that have happened with the board over the years, which really held it back. And then a low interest rate environment, we've seen that change. We're looking at a period now where we're expecting interest rates are more likely to be on the rise in Australia anyway. And so that supports a higher price. And now it's just coming back to find support off a historical levels. So there's still plenty of room to the upside. And people probably looked at QBE and thought, well, how could it, get out of all of this? But eventually they do. And that's what QBE's done. And it's done it in a sort of a rhythmic way, which is really nice to see it. Notice how it's that bouncing ball effect that we talk about with trends. And it's really respecting the angle of that one. If we just look at the momentum underneath it, it's really holding on to that, isn't it?
Yeah, looks good. And you're right. If we do hold like we did today and continue to keep it at a certain level or raise, it's shown in history to work well for QBE. So that's a nice little play for 2026. All right, well, it's that time. Your favourite?
I think I gave mine away, so I'm still going with CUV. I do like QBE as well, but CUV.
All right.
Did you notice how he was quick out of the blocks? He didn't even say ladies before gents this time. You're so excited about it.
I'm very excited. That's how you know. Well, ladies second then.
Oh, thank you. That's so cute of you. All right. Now, I think I'd have to say, even though NHC's got some issues, I like the setup of that and S32, so I'm having two.
Yep. All right, so you go and fuel the miners.
Yeah, right.
And the traditional, the fossil fuels.
That's right.
My other question was going to be, you're starting to get hot with that hat on, but...
No, it's actually quite cosy.
It's quite cosy.
That's probably why you chose NHC, right?
Yeah, no, I think I'll pass. All right, moving on shortly, we are going to get into our hot stock tip, which looks amazing right now. But first, let's answer your questions. David writes, I am looking at Airtasker after attending an investor day. The investor day was fabulous, seeing the growth and being a tech company. And I see from the chart it is making a higher low. I want to buy at 35 cents. Looks like the 20, 50, 100 and 200 moving average is consolidating together, and I think it's going to run quickly. All right. Pedro, Airtasker.
Yeah, right. Yeah, it's a good company. I've used them before. I've used the app. Yeah, you just you take a picture of what you want, and you get bids, and you get a tradesman to help you with whatever you need, moving something.
Right.
It's great. It's like freelancer.com.
Okay.
Can I say that I like the ads?
They're quite funny, aren't they? Yeah.
That little Asian lady, I just absolutely adored her when she was, when you would see this big bloke, sitting on the couch, and then this little lady comes in and she sets up the TV and the aerial and everything for him. I just thought it was gorgeous. Whoever did the marketing for that, I thought 10 points.
There you go.
Quite well.
I've never seen it, but let's get to how's the stock looking? That's the more important thing. 35 cents, good entry.
It's looking nice. I'm not sure about the 35 cents where you would get that, and I would say that if you are looking at a certain level, think about it. What is your rule? Why at that 35 cents? So then you can replicate it. And then you need to also find out or learn when you will get out as well. Because a lot of people, they write to us and they say, I'm looking to get in at this price, get in at that price. But how are you looking to get out? Because you need an exit strategy. So really on the monthly, I think it looks great. It has formed a nice trend here. Ever since the low in 2023, it's trending quite nicely, and now it's getting to a nice level. So I understand why he's getting excited and looking at it. A more conservative buy would possibly be above that level there, which is around that, 50 cents, say 48 cents. Don't be afraid to leave some money on the table, because really you want everybody else to take the risk when it's at those lower levels, and then you get in once you see more volume coming into it, and when there's more traders in the market. It is a nice upside too there for a nice short-term trade anyway. So I would just say make sure that you're entering on a rule, so then you can actually learn from it if it goes sour, and then you can replicate it if it goes good. Because that's very important. 35 cents, it would be above that level there. So it's probably entering above that high there. So at least it's some type of a line in the sand. So I congratulate you for that. It's pointing down at the moment there on the weekly. So I would say that support right now, it's quite choppy, but there looks like to be some possible support around that 30 cents. I would say that would be that first support.
All right, so be mindful of 30 cents is Pedro's call on that one, but good email. Thank you for sending it in. Now, Reese is next. Could you look at FBU? It's been on a long-term downtrend and may have found the bottom. I've noticed that this stock seems to fall around 60 to 70% before finding support and turning to the upside. I'm looking to enter. Stop loss will be set, and the next area to watch will be $3.90. All right, Janine, sounds like he's got everything in order. Stop loss.
He has, and he's looking for patterns over the history of the chart. I can see, I just jumped straight into the chart while you were talking about it. We've got a big fall here. I don't necessarily see it's going to repeat the same things in history over and over again, because this is part of a decline. So we're looking for the next rise, and you'd expect the falls to become less when the stock turns and makes that bullish move. So we saw 32% on this one, 60. Now, what's more important now is what's going to happen on the upside, and where is it more likely to run to. So I think it's a good choice from a trading point of view, because you can see that there are those opportunities. But also, to the other point, a lot of traders talk about getting bored, or once they've got the education and they know what they're doing, so they're not trigger happy, they're wanting to trade all the time. But for those who are wanting to trade more often, this could be a boring stock, because if you look at what the trends are telling you, you've got that rise there over 12 months or so, and then nothing after that. You're better off to be out of it. There's a big decline there over a couple of years or few years, and the same thing happens. So I guess for this one, if you're trading it, if you're more shorter to medium term or short term, you just be looking at getting those opportunities over that sort of same time frame until it shows you otherwise. But from an upside point of view, from where it is right now, I think it could easily could go 100%. There's a real possibility for that stock to go 100%, if not sort of around the 50. Yeah,
but it's an important point, because you're right. This stock has spent more time falling than going up in its history. And the time that it did go up happened right at the start. And that often can be, well, I'll get your thoughts on it. Can they be often a bit of a warning sign? Because most stocks, when they list their IPO, hype, excitement, then reality sets in. But over a 10, 20-year period, you spent more time falling than going up. A lot of things are going to have to happen for you to get back to, bullishness, because you don't see that with your CSLs, your Cochlears, your BHPs. Over time, they spend more time going up than falling.
Yeah, exactly.
So what's wrong, with this one?
Exactly, and that's what you've got to ask.
Yeah.
Exact question. And at the time when you ask it, you've got to look at the risk and are you more likely to get taken out of it. So even if it does spend a lot of time over a long period of time going down, is it possible to exit and exit in a reasonable way? And just looking at the rate of rise of these moves and the way that it consolidates after the top, I think it is. I think there's a good opportunity there just because of that consolidation after the top. It's just a question of having the right rules.
Yeah,
it also highlights the buy and hold story. How 2004, that's the last time that the price was at this level. So if you buy and hold, have a look at this chart. You don't want to be going through that roller coaster.
Yeah, good point. All right, Jack is next and writes, I know you don't normally look at US stocks, but I was wondering if you could take a look at Netflix for me. Netflix is looking to purchase Warner Brothers for $82 billion, but Paramount recently came in to outbid Netflix for Warner Brothers. So do you think it is a big buyout like this could cause one of the biggest gains over the next couple of years? And which one should I buy, Netflix or Paramount? Also, what happens if this causes a monopoly? Is that likely to tank the industry or the stock? Now, there's some serious questions in that one, but I think the first one I want to ask is, before we get to the stock, is a monopoly likely to tank the industry or a stock? I mean, for me, you talk about Warren Buffett's philosophies, that provides a moat, and that's often a good thing for the stock if it can have the dominance.
Yeah,
not bad. There
is a downside though.
Tell me.
So it depends where you see us in the market. So if we're a couple of years out from a peak and they're spending big dollars to have this acquisition so they can have that dominance, then that could be fraught with danger. How does the industry perform in a down market? That's the big question. Or are they likely to be on the rocks? So is it no issue for Netflix if they miss out? You know what I mean?
Well, they're spending a lot of money. I know Paramount, they've recently bought the UFC. They've taken away a model, which was the pay-per-view model that had lasted forever in sports. They're willing to take that cost and not do that anymore, to pay for, give it to people for free. So they're spending a hell of a lot of money, and you're right, that kind of investment at the wrong time, that can hurt a lot. So, I mean, any thoughts on this whole?
Yeah, well, look, to me, really streaming services have become a staple in the household. Everybody that I know anyway, I'm sure has a subscription to at least one of these. Netflix seems to be the top one. You've got Disney Plus and you've got Paramount and all of that. So if Disney manages to, Netflix manages to buy Warner Brothers, that does cause a big conglomerate of, some heavy, they'll own DC, which is Superman and Batman and all of that, and you've got Disney that's got Marvel, so there'll be some rivalry there. But even in a downturn, I think that's a good point for what Janine said, but I also think that, we have to look at periods like COVID that actually streaming services went up. When people are in the home, they still want to stream those services. So I think that it's something that it's here to stay. Whether it's going to cause any issues in the industry, I can't say, because I really don't know. I'm not familiar with all that. But the charts, I can definitely speak on that. I'm seeing some interesting things there.
Well, let's go and do that. What are we thinking? We don't normally do this looking at US stocks, but hey, it's a nice question. We can look at both and give us your thoughts on which one you think you prefer.
I guess if we're just before we do that, if you don't mind, if we're talking about takeovers,
yes,
then the company doing the taking over is often the one that will pull back, and the one being taken over goes up.
Yeah, but at some point, neither of those are getting taken over. They're both looking to take over Warner Brothers. At some point, that'll filter through over the years to add the share price appreciation if it's a good deal. But today, looking at the charts, which one looks right? If you were to take away all that information, which one looks best?
For me, the right-hand side looks best, and that's Paramount. And I believe the CEO is Larry Fink. He's a good friend of Trump. So I've heard some commentary saying that actually Paramount hold the better cards when it comes to this takeover. Like Trump isn't a big fan of Netflix, and apparently he might make it harder for them to acquire Warner Brothers. So Paramount, I would start there, and I like that. It did IPO back in August 2025. It was just a recent IPO basically. We're on the weekly chart here, and it went up. Unlike usual stocks that IPO, that tank on the IPO, this one actually went up, and it's coming back to retest that level. So the all-time high there was at around that $20, and now it's trading at around that $14. So that's a key level, and it actually forms some support and resistance even back from the IPO price. So around that $12. To me, the structure of that move looks more interesting, and the fact that it's pointing up. I'd be, if this was just a stock in our market that we're talking about, I'd be getting quite excited, but I'd like to see a break above that momentum there.
Yeah. Janine?
I don't think that I'd necessarily factor in what Trump has to say on this one. Maybe he's got shares in it, who knows. But if we're just looking at what the overall picture is, I'd like to see Netflix come back sort of around that $80 mark. And if it comes back to that level, who cares whether they get the deal or not?
Yeah.
I think that there could be an opportunity in there as well.
Okay, good point. All right, now time for our hot stock tip this week, coming from Pedro. What have you got, buddy?
All right, this one, of course, in the natural style of mine is SGQ. So it is a little bit of a lower cap play, minor, but it came up with a nice announcement yesterday, which, by the way, this is a company that's backed by Gina Reinhardt. So, that says something. They came out with the thickest intercept at Araxa to date, which basically they're exploring rare earth. So they've come up with the highest and the thickest grade of rare earth elements to date. So this is quite promising for the company. Now, technically on the chart, there's some interesting things happening. Can I ask,
is it more than half a cent?
Well, yeah, you might have to take a deep breath before you look at this one. Make sure you're sitting down. All right, it's not for the faint-hearted. You're talking about volatility before. This would be on the upper scale of the volatility. You can see these sharp spikes, right? But I do believe that now it looks like it's changing quite somewhat. It has found support around that level there, which is the 1 cent, 1.4. Just to make it a little bit higher. And on the weekly chart, if we expand that out, it's making some interesting moves. So we're getting more volume coming into it. It's coming back to around half of that rise. So we could be seeing some support starting to come in. And if we just scroll back, and this is why it's so important to know your previous levels. Don't just willy-nilly invest in a company just because you hear Gina Reinhardt's name, or if it's, the story is good. You need to look at the technicals. This is a must. It's non-negotiable, because no point on investing up here only to see it fall, and then your psychology goes to CRAP, and basically you sell and you start to question yourself. You want to get in at a nice level, and I would say that the 8 cent level is looking quite interesting. You'd want to see a bit of a bounce, and really liking that volume coming in. It's becoming a lot more liquid, and it's in the rare earth space, which I believe is going to do well into 2026.
Fantastic. All right, if you want more from us, check out our video, Oil Stocks Just Turned Bullish. Get in early.